Oil markets are known for volatility, political tension, and dramatic price swings, which makes them seem unpredictable to most people. But experienced oil investors often think very differently. Instead of reacting to short-term headlines, they focus on long-term global demand, energy infrastructure, supply cycles, and the reality that much of the modern world still depends heavily on oil. Today we will talk about why oil investors always think long-term. So, before we get started, make sure to hit that like button, also subscribe to my channel. 10. Oil has been declared dead many times before. Every few years, headlines appear claiming oil is finished. New technologies emerge, renewable energy grows, electric vehicles expand, and people begin predicting the end of fossil fuels entirely. This creates the impression that oil investing is outdated and temporary. But experienced oil investors rarely react emotionally to these headlines, because they understand something most people overlook. Global energy systems do not change overnight. Oil still powers transportation, manufacturing, shipping, aviation, construction, chemicals, agriculture, and large parts of the world economy simultaneously. 9. Energy demand continues growing globally. One major reason oil investors think long-term is global demand. As populations increase and developing economies expand, energy consumption continues rising globally. Billions of people still want improved transportation, industrial growth, infrastructure, manufacturing, and higher living standards. All of these activities require enormous amounts of energy. While renewable energy continues growing, global oil demand has remained remarkably resilient because many industries still depend heavily on fossil fuels operationally. Long-term investors understand that energy transitions historically take decades, not years. They study long-term demand trends rather than reacting only to short-term political or environmental headlines. 8. Oil markets move in cycles, not straight lines. One thing experienced oil investors understand deeply is cyclicality. Oil prices constantly move through boom and bust cycles influenced by supply, demand, geopolitics, wars, economic growth, production cuts, and global trade activity. Prices may collapse during recessions and surge during shortages or geopolitical tensions. Short-term volatility often scares ordinary investors away because price swings can become extreme. But long-term oil investors expect volatility as part of the industry itself. 7. Supply constraints can create massive price surges. Oil investing is heavily influenced by supply limitations. Producing oil requires enormous infrastructure, exploration, drilling, transportation systems, refining capacity, and geopolitical stability. New production cannot always increase quickly when demand rises suddenly. This creates situations where supply shortages can push prices sharply higher. Long-term investors pay close attention to declining oil fields, underinvestment in production, geopolitical instability, and global reserve levels because supply constraints often take years to develop fully. 6. Oil is deeply connected to global politics. Another reason oil investors think long-term is geopolitics. Oil is not simply a commodity, it is tied directly to national economies, military strategy, trade systems, and global power structures. Wars, sanctions, political instability, production agreements, and international conflicts all influence oil markets significantly. Experienced investors understand that governments and global institutions will continue protecting energy access aggressively because modern economies depend on stable energy supplies. This geopolitical importance makes oil markets highly strategic and often unpredictable short-term. Long-term investors therefore focus more on structural energy realities rather than temporary political narratives. 5. The world still depends on oil infrastructure. Many people underestimate how deeply oil is integrated into everyday life. Oil is not only used for gasoline. It is connected to plastics, chemicals, fertilizers, shipping, aviation fuel, industrial manufacturing, pharmaceuticals, road construction, packaging, and countless supply chains globally. Replacing this infrastructure completely would require enormous time, investment, and technological transformation. Oil investors understand that modern civilization was built around fossil fuel systems over many decades. Because infrastructure changes slowly, oil demand often remains stronger and more durable than short-term public sentiment suggests. 4. Oil investors understand human behavior. Markets are emotional, and oil investors know this well. During periods of high prices, people believe oil demand will stay strong forever. During crashes, people suddenly believe oil is permanently finished. Long-term investors avoid both emotional extremes. They understand that energy markets repeatedly swing between fear and optimism because human psychology reacts strongly to economic cycles and headlines. Experienced investors instead focus on long-term fundamentals such as production capacity, reserve depletion, industrial demand, and energy infrastructure. 3. Underinvestment today can create shortages tomorrow. One of the most important ideas long-term oil investors monitor is capital investment. During periods when oil prices fall or environmental pressure increases, energy companies often reduce exploration and production spending. At first, this may not seem important, but over time, underinvestment can reduce future supply growth significantly because oil production naturally declines from existing fields over time. 2. Oil companies often generate massive cash flow. Even during uncertain periods, large oil companies can generate enormous cash flow because energy demand remains globally essential. Long-term investors value this cash flow heavily because it supports dividends, buybacks, expansion projects, and long-term profitability. While oil markets remain volatile, experienced investors recognize that major energy companies frequently control strategic assets, producing billions in revenue over extended periods. 1. The real reason oil investors think long-term. The deeper truth about oil investing is that experienced investors understand something most people underestimate. Modern economies cannot rapidly replace energy systems built over more than a century without massive time, infrastructure transformation, and economic adjustment. Because the truth is simple. While headlines and public sentiment change quickly, global energy demand, industrial systems, transportation networks, and infrastructure evolve far more slowly over decades. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.